Governor of the Bank of Ghana, Dr. Johnson Isiama, has expressed optimism about the current flexibility of the Ghana cedi against major global currencies, attributing it to the central bank's policy framework. Speaking at the inaugural address of the Bank of Ghana Chair in Finance and Economics in Accra, Dr. Isiama emphasized that the regulator will work to prevent excessive volatility in the currency.
The governor of the Bank of Ghana at the event highlighted the need for financial institutions to align their strategies with the Bank of Ghana's broader.
We are using a managed floating framework, and under managed floats, at least the currency must move, isn't it? It is different from a fixed exchange rate. But there's this interesting phenomenon in Ghana which we really need to work to change. Currency moves in one direction, everybody moves with it. The moment the cedi gets to 10.7 tomorrow, everybody says then it's going back to 15.0. And I ask why. The exchange rate, we keep saying, is an endogenous variable, particularly under the framework that we are working with. And so the cedi, dollar rate must move on a daily basis. It must move. A colleague gave the example that he was in a queue in South Africa to change some dollars. They were in a queue, and right when he was in the queue, they were told the exchange rate had moved. And that's the beauty of it. But in Ghana, let the exchange rate move in a day. There's total news all over the country why the cedi has moved. And yet the cedi must move. When the exchange rate is flexible, it protects the economy against shocks. And so must it be. Our preoccupation is to ensure that those movements are not excessive. And that is what we commit to do. We do not target any band. We do not target any fixed level. Our objective is to ensure, and let me emphasize, that we do not have movements that are excessive.
Meanwhile, the governor of the Bank of Ghana, Dr. Johnson Isiama, is calling on banks to revise their lending models to provide stronger support for the private sector. His appeal follows the central bank's decision to cut the policy rate by 300 basis points from 28% to 25%, a move aimed at easing credit conditions and stimulating economic growth. Dr. Isiama made a call while speaking at the Chartered Institute of Bankers post-MPC roundtable discussion here in Accra.
The governor of the Bank of Ghana at the event highlighted the need for financial institutions to align their strategies with the Bank of Ghana's broader effort to create a more resilient and inclusive financial system.
Are they prepared to look away from the T-bills? Are they prepared to look away from the high Bank of Ghana instruments and their high interest rates? The era of high interest rates and passive investment by banks in government securities is ending. Banks must now begin to reimagine their business models, refocusing on intermediation, on innovation, and on credit expansion to productive sectors. With inflation decelerating and rates on a downward path, there is a unique opportunity to support private sector growth, to support SMEs, to support agriculture, and above all, to support green financing.
Speaking to Joy Business on the sidelines of the event, Chief Executive of the Chartered Institute of Bankers Ghana, Robert Jatto, reiterated the importance of providing robust support to banks to enable them fully play their role in national development.
In terms of what banks should do, I think the starting point really is developing the necessary competencies in managing risk. And that's very, very important because the business of banking is actually risk management wrapped up in customer centricity and some innovative solutions. And therefore, understanding the risk that banks face within the economic context, within the industry context, will be very, very important. But building capacity and building competencies will be very, very important. In my view, From the Institute's perspective, it will be building character, which is the ethics of bankers and banks, but also the competence, which is the competence, the ability for banks and the skill set that they require to develop to be able to assess those credit risks in a proper manner, and even more importantly, complying with the rules.
The roundtable discussion was under the theme Monetary Policy in Action, how NPC decisions shape Ghana's economy and financial sector.